Commodities sold off sharply in April before starting to rebound. The sell-off raised the specter of whether the wheels have fallen off the commodity supercycle. The calls aren't new. We heard this warning last spring when commodities sold off in the face of weakening global growth. But commodities later rallied on an improving economy. So is it indeed the end of the long-term bull market or a synchronized sell-off with slowing global growth? Here to weigh in is Peter Sorrentino, manager of the Huntington Real Strategies Fund and co-manager of the Huntington Disciplined Equity Fund, and Kent Croft, president and co-manager for Croft Leominster. Gentlemen, welcome to the program. Thanks so much for joining me.
Thank you, Jennifer.
Nice to be here.
Pete, let me kick off the conversation with you. I had you on the program exactly 1 year ago to discuss this very topic. At the time, you thought that the secular bull market in commodities had run its course. Are you still standing by that call?
For the most part, yes, I do believe so, with the exception of perhaps the agricultural commodity space. I believe industrial metals, energy complex by and large, even I think the precious metals, at least for the interim, I think we've seen the highs and are probably looking at a period of maybe some cyclical moves, but for the most part, I think the secular trend there is probably past us.
How much does China's economy drive commodity prices, Peter? If we're seeing a slowdown in China's economy because the economy is maturing as opposed to more of a cyclical slowdown, right? Or does that spell more muted commodity prices going forward?
I think it does. It's also on the back of a very long capital spending spree that over the last decade has brought a lot of new capacity online. So without the export engine of China consuming rather large quantities of basic inputs, I do believe that we're waiting for the next emerging economy to kick into gear. So for now, I think we could say that that really China has kind of ebbed and is moving into its next phase of growth.
Kent, let me bring you into the conversation. What's your sense? Do you think the long-term bull market in commodities is over, or do you think it's simply a synchronized sell-off with slowing global growth?
I think it's probably no doubt that growth is slowing down. I don't know whether we're at the end of a super cycle or not, or whether there was one or what have you. I do think there are some specific commodities that have attractive long-term characteristics here within any type of cycle, and that is natural gas and some timberlands. I would agree with Peter that it's tougher to make the case, obviously, now for things like copper and where the demand from China, where there's been very strong from China going forward. But I do think there's some other areas where you can find some good value if you take a long-term view.
Kent, you mentioned you like natural gas here. How do I play that if I'm an investor? I would imagine buying the producers outright would be kind of a long waiting game given the abundance of supply.
Well, we do have a lot of supply, but you have seen, it might not be such a long waiting game. We have good reserves here, but you've seen large international companies and actually international governments make strategic buys in the natural gas area here in the U.S. and in North America. The government of Malaysia, China, Korea, companies like ExxonMobil, Royal Dutch Shell have made, and even in India have made significant investments looking at natural gas as long-term strategically important for their economies.
Well, and I have in my notes here you like Southwestern Energy, right? Alta Petroleum, the Williams companies. Do you want to tick through some of those names and why you like them?
Sure. Southwestern and Ultra are two exploration and production companies. Again, the reason we like them is because we feel they're sitting on they have a good reserve base, a lot of reserves in the ground, and they're also low-cost producers. So we think they're sort of able to, ride out over time, tougher times when, as the commodities move up and down, or natural gas moves up and down. We also like Williams, pays a good dividend. Generally, it will benefit from more gas usage, natural gas usage generally, as it starts to penetrate the transportation sector, more for utilities, and also U.S. manufacturing that is more manufacturing capacity that's being built to take advantage of low-cost gas. And Quanta Services, they basically help build pipelines too. So they help connect the gas from the source to where it needs to be used. So we think they generally benefit as well.
Peter, even if there is an overall slowdown, is there still money to be made in commodities now?
There is. There are a lot of, you get a lot of seasonality within commodities. So there's a great trading play usually, especially with agricultural commodities in the spring. You get the big run up to the anticipation of what planting season is going to look like. Then it goes dormant until you start to see what the projected harvest data is going to look like. So within the specific commodities, there's a certain seasonal pattern that can be played. And again, to Ken's point on natural gas, that's probably one of the few bright spots in the energy complex. This year, we've seen a huge move in not so much gas prices, which are up literally $2 an MCF this year, but we've also seen a lot of the ancillary plays, a lot of master limited partnerships, which typically are pipelines or infrastructure in nature. They've had a phenomenal run this year. Most energy companies are looking at ways to spin out some of their assets to master limited partnerships.
So how are you playing those, Peter? I mean, are you investing in individual stocks? Are you looking at ETFs? You mentioned the MLPs that have run up. Is there still room to run here?
There is. I think, as we've seen in other industries in the past with REITs in the last decades, there's been a play. There's an exchange-traded fund, the Algerian MLP ETF. That's a great way for an investor to get a big basket of these. There are also some very large ones out there. Ken mentioned some of the ones that they're currently utilizing. So there is a play here, and it's not too late because this is a long-term trend for especially domestic energy use.
Pete, coming back to precious metals, I mean, what's your outlook there, particularly gold? Looking across the globe, given easy monetary policy, you would think that that would be a good bet, yet it seems that professional investors have kind of fallen out of love with the yellow metal. Is the gold rush over?
It's definitely facing a headwind. The central banks have 2 years in a row come out at the end of the first quarter and essentially staged a raid on gold. Someone shorted 400 million tons worth of gold on one particular day. There are very few, there are very few people that can short that kind of gold in the paper market. But yet, to your point, physical demand in Asia remains very strong. We're seeing physical deliveries of 40 and 50 tons at a time in Singapore. They had to close the doors in Australia. There was such a run on gold coins at their mint. The U.S. mint is sold out of the smaller denominations. So from the retail investment standpoint, there's still very strong demand. But in the face of when you see these large pools of money, the hedge funds and some of the other specific pools of money that are dedicated toward that, when they're exiting, you're fighting an awfully strong current. So,
right. So where do you see the price of gold going from here?
I think we've rallied back somewhat from the sharp sell-off, but I think we mark time in here until something, they say it doesn't matter until it matters. All this profligate printing of money at some point will matter, and for those who have retained a position in gold, it's going to pay off for them. But, the timing of that is, anyone's guess at this point.
Right. And I also have in my notes here, Kent, that you are playing Timberland. Is that kind of a play on the rebound in housing?
That's part of it. Timber is another sort of unique commodity within the commodity complex in that it has different characteristics than most commodities in that, the timber grows over time. It's not as fixed as others. So you have higher and better use of the timber, even if you're not selling into the market. The housing market, actually, we've been building houses way below trend for a long time now. So we think that probably has, multiple years to unfold and will generally will benefit that. But there's also incremental demand from China and also problems with pine beetle affecting supply up in Western Canada.
All right, gentlemen, thanks so much to both of you. Great discussion. We'll see you soon.